So that's it. We just talked about everything you need for a setup and execution of a London close trade. So what I want to do now is I'm going to once again go over those 10-step checklist that I showed you earlier. Use this checklist when you're looking for a trade. It's here for you to use. Okay, don't take anything for granted. It's one thing to get stopped out of a trade. We all get that. But it's really lousy when it's a self-inflicted wound. You weren't paying attention to something that you should have been because you didn't check your list or whatever. Let's go through these one more time. Observe the 5-day average daily range. I've got a little spreadsheet for you that you can use. I'll show you that in a minute. Identify qualified pairs. That means ones that have reached or exceeded their 5-day average daily range. Wait until the London close time zone. Don't jump the gun on these things. Just be patient. If you're ever wondering if it works or not, go back and look at Shirley's spreadsheet. Step 4, check the US dollar index to see if it's at its 5-day average daily range. Okay, and remember, if you're trading the US Swissy pair, it's really important to see that. Check for the key levels on the higher time frame charts. These are places where we would normally expect a reaction, but even more so when that pair has met its average daily range at the London close. Right? Makes sense? Number 6, this is really important, to check the risk environment. Check to see what the stock market's doing. If it's up or down just a little bit and not going anywhere fast or kind of stable, that's no problem. If it's really rocketing up or tanking, find out what's going on and be very cautious. I'll tell you guys something. This happened earlier this week. Shirley and I were actually looking at a US CAD trade. It was on Tuesday, and the Dow had quite a drop. And all sorts of stories were being floated around about the big problems in Ireland, and then the story about Austria saying they weren't going to support Greece, and just general concern about the plight of the euro. So what happened? There's a big flight to the safety of the US dollar, and there was no slowing down at the London close. So this was, this is the time you just want to wait, stand aside. Coming into London close that day, gold was way down, something like $38 an ounce. Oil was down over $2. The Toronto Stock Exchange was down like 200 points. This is bad for the Canadian dollar. It's a commodity currency. So it's positive for the US CAD pair, right? Just because of the way it's paired. So we stood aside until things started to fall back into their ranges, even though there was actually a qualified swing and everything. We just waited, and it saved us from having a loss just by being aware of the risk environment. Once everything looks good to go, you just want to enter using that knowable entry. You set your stop. You manage to trade the way we showed earlier. And finally, woohoo, take your profits at the targets that we suggested.